Hello everyone, welcome to Macro Cafe. This is a weekly series in which we cover some of the most important markets and we try to look at them through the eyes of the wave principle. We try to look at some sentiment indicators, counts, and even candlestick analysis and see what the markets are kind of telling us here. So today we're going to cover the S&P 500, we're going to cover the NASDAQ 100, we're going to take a look at gold, and then we'll follow up on the Tesla chart, and then some interesting developments also on Zoom as well. These were a couple of requests I've had on Twitter. So I put a question out there. Maybe I should have put it last night so I could get more responses. But, this is kind of what I've been, watching and some of the requests we've had. So before we get started, I want you to head over to Twitter up here and give me a follow at Elliott Cafe. You'll find plenty of interesting things up here. I'm trying to stay on top of the markets every single day with commentary and charts. Go ahead and also kind of follow me up here on the Substack, right? Elliott Wave Cafe, Substack.com in here. And I'm trying to put out a weekly report here, where I'm kind of following up on the week's hottest markets and opportunities and, kind of what's trending, what's lagging, what I see, things kind of moving, in the week ahead. And then lastly, go ahead and give us a try up here on Telegram. This is my private trading room, and you can take a 30-day free trial and see kind of how you feel about it. And, if you decide to stick around, let me know, and we'll get you going. So let's jump over to the counts. And I've done a longer video, about 40 minutes, I think, was it on Wednesday or Thursday, where I've covered pretty much in depth a lot of these counts, and I looked at more markets, in kind of detail. And it was, the video where I was talking about how the sentiment is kind of starting to shift in this market, and, how continuing to maintain a bearish posture in here, it could be somewhat problematic looking forward, because a lot of the signs are starting to come in that these markets are in the process of reversing to the upside. And we usually look at breadth, we look at sentiment as well, kind of what's happening with the stocks in the new 52-week high lists and all of those. And there's a lot of important breadth that's taking place underneath the market. And plus, we've broken above the trend line. So, we can argue back and forth about if this is a trap or if it's, something that's not going to be sustainable. We'll see. But for right now, I want to be in sync with kind of what's going on, and we'll try to follow the count. Now, I do still have, a little bit of a bearish alternate in here. This was the one that we're following for a while, where we're looking at this rally here as either as a full B, but I think we're in the process of taking this high back there, if we haven't already done it on Friday, which shifts this B wave a little bit over. So this becomes then either a 1-2, 1-2 through a simple ABC, or, again, just a WX, Y, X, and then A, B, and then still another wave lower in C. So we still haven't, kind of completely dismissed this count, but I think it's falling apart slowly in here by the way the market is starting to behave in here. So kind of going back to the bullish, what I'm seeing in here is I'm counting it obviously as a completed correction now, starting from the heights here in A, B down in a shorter wave C. And then since then we've pulled up here in an impulsive manner in a wave 1 up into the trend line, and then we corrected in a wave 2. And, we're starting to kind of get the next impulse to the upside. So you can see there's no more arguments regarding this trend line, which is clearly broken. And, when this happens, usually there's a lot of interest that comes out, and, it could continue to kind of trend this market higher. If you look at the equality between this wave 1 and an upcoming move in here, right, be it a C wave or be it a third wave, 100% between this wave 1 and this wave 3 comes at about 44.40. And I think there's a decent chance of this market continuing to rally into the first week of March. Now, I put here March 5th, you know, could be a few days before, a few days after, but I think, you know, these are some, you know, kind of strong targets into this upward move that should continue into the month of February. Then we should probably going to start falling back here, either in another second wave or maybe in a fourth wave that could take us maybe to the end of May. And then, you know, from there on out, then we'll see how this looks, you know, but I have a feeling that this will probably going to continue to push to the upside. So that's kind of what I'm watching on the S&P 500. Let's take a quick look also, you know, with kind of the candlestick patterns, a very, very strong close here. I mean, if I go up on the weekly charts, right, it's a very strong week. It broke above this. It looks like, you know, you're having a pretty good reversal pattern here in an inverted head and shoulder formation. You know, if I look at the daily, yeah, you know, they tried to overtake 4,100, but we kind of fell short of that and pulled back. So we'll see. Maybe there'll be a little bit of a pullback into next week, maybe a retest of this trend line. But overall, I think this has a great potential of continuing to the upside. So let me take you over to some of these charts here as well, and I wanted to show you kind of what's happening, you know, kind of longer time frame. So we started this at the end of the financial crisis in 2009, back in March, and look at this uptrending channel, right? And I've talked in kind of some of my previous videos about how this is, you know, a pretty kind of an important secular bull market, that, you know, we had the correction in here, and you know, it could have had the potential to sell lower to the next boundary back here, right? That we see the COVID lows, and if we were going to start to push to the downside, if that would have happened, let's say a little bit sooner in here, you know, you could have gone all the way down to 3,200. But the markets are continuing to reject these levels to the center of this channel, and you know, now we're getting big divergences here in the PPO. You can see how the 12 and the 26 moving average are starting to kind of almost cross over the zero line in there. You can see the RSI also kind of diverging between this low and this low, and it's pushing above the 50 line as well. There's going to be a little bit of a resistance as we're approaching, you know, as we're going to be approaching 60 in here, and we need to kind of cross over from the zero line, but there's great potential of that kind of happening. If we take a look also at new highs versus new low list, this is on the New York Stock Exchange, and I've showed on the weekend what happened. I mean, not on the previous video, I'm sorry, on Wednesday, and what happened, you know, the NASDAQ Composite, which looks very, very similar. You know, it's the first time, you know, it's since, you know, back into 2021 bull market in here that we've had a very decent you know, ratio between the new highs and the new lows. So those new highs continue to appear on the charts, and then look at this, you know, this whole red thing in here is just a bear market, right? And the signs in here are showing you that you're starting to move into a bullish market. You have a head in here, you have the left shoulder, you have the shoulder, right shoulder, you're starting to break above the neckline in here. So, you know, bulls have a lot of stance on here, right? They got a lot of arguments. The bears, you know, there's not much to really hang on. There is not a lot of divergence. If I look at the percentage of stocks above the 50-day moving average, it's climbing. You know, we've been rejected at prior levels and went down, but this one seems to be sustained. Also, the percentage of stocks above the 200-day moving average, it's greatly increasing in here. We're sitting at about almost 70% of those, and once we get above 75, you know, you can sustain that, and that transforms itself into a bull market. So, you know, I'm just presenting some data in here, you know, so just so you can kind of know where I'm coming from when I look at this now through more of a bullish perspective. I know I've had a couple of videos, let's say, you know, last week, maybe a couple of weeks ago, you know, where I presented some counts that were definitely, you know, a little bit scary. They're still valid somewhat, and we can, you know, I can kind of show you some of those. I mean, look at, let me show you here. So for example, this one, right, it's that 1, 2, 1, 2. And, you know, for anybody that's a bear, this is a great risk, right? Let's say that this is an A, B, and then up in C. And unless you're overtaking, this high back there at about 43.25, this is a great, has a great kind of look to it, right? The difference is kind of what's happening underneath the surface with the stocks. So, you're making a lot of 52-week highs. You have, mega stocks kind of starting to participate. You got Tesla, you got Amazon, you got, even Microsoft is recovering. There's XLK, XLY, all these XLC, all these sectors, show great improvement. So it's very hard to maintain this posture when you see all that kind of happening underneath the surface of, an index. So that's why I'm shifting a little bit more towards bullish side, but I will keep this, just to kind of remind me of the risk that exists still until some of these higher levels kind of get taken out, right? So that's the 1-2-1-2 scenario. So now back to kind of our important charts in here. I also wanted to show you, and this is something I showed a few days ago too. I want to reiterate this. Look at how much green we're starting to have on the 52-week highs on the New York Stock Exchange, on the S&P 500, and on the NASDAQ especially, right? Stocks that, you're seeing since the end of December less and less red on these charts, which is kind of what you want to see. So, we're about to get a crossover between the 50 and the 200, right? That's the golden cross. And you're probably going to hear it in the media the moment this kind of happens. And, if we continue to behave as we've been behaving for the past couple of weeks, I think there's a great chance of this happening. Like I said, it should continuing this bullish rally should probably continue till about March, beginning of March, and then we'll probably go into a period of corrections, till about May. So, we'll continue to kind of keep an eye on that. The other thing I wanted to show you is some of the risk parameters we're watching. So these are the credit spreads that are coming lower, right? Which means that the risk is kind of being pulled off from the market. You could see how, huge spikes we've had in here in COVID, back here in 2016, right? And then obviously, your great financial crisis when you just kind of blow them through the roof. So, this coming down is, it's an important sign. And also I wanted to show you the TED spreads in here. So this is basically, the difference between the US Treasury 3-month T-bill and the LIBOR, which is the London Interbank. This is kind of, how the banks exchange money between themselves and the rates. So that spread right now sits at about 0.25. And every time you're below 50, you're starting to be relatively safe. It was sitting in a very risky environment here for a long time. I mean, look at this downtrend and where the spreads were. And now we're trying to kind of come back. And just to kind of, give perspective to all this, in the great financial crisis in 2008, 2009, these stat spreads were 4.5, right? We're sitting at about 0.25. So there's not, unless, something happens that disturbs completely the financial system and you're starting to get breakdowns, it's very hard to begin a massive decline. So, just kind of keep that in mind, when we're looking at the charts and when we do analysis here. So, let's see what's next. Let's do NDX. So, NDX again, just, that kind of riskier count that I've showed before with the S&P 500 still remains valid until we're breaking above these levels back there. Give me a second. Sorry about that. My cat just walked into the room here and she was trying to have a little bit of fun. So I was talking about the NASDAQ and the kind of the bearish posture. Let me show you. I think I got it here. So if we're following along with the S&P 500, what's happening in there, right? This one looks a little bit uglier than the S&P 500, even though you started to break above the trend line. You do have this kind of ABC with the shorter C wave. And, for a while, I mean, once you kind of did this move, which looked corrective, and then you pulled lower in an impulse, we were looking at this pullback and I was like, man, this has got to be some kind of an ABC in here. And then we're going to roll over, break this and continue down. The market said, nope. And the moment I saw a failure right up here in these levels, I completely flipped bullish and I said, I don't think this is going to work. I kind of talked to my members through the videos daily and updates and everything. I said, this is not looking good. I think we should start. So we start buying stocks, Amazon, and, some of these kind of riskier ones as well. And we've been enjoying this rally back here. So now we'll see how sustained it is. I mean, there is a 100% equality at about 12,464 on the NASDAQ. This is probably going to be the next targets that are going to get hit. And then eventually you get to 13,700, which is very close to this B wave. If you take those levels, right, then there's not a lot of argument for the bear side, because, you know, you're going to be falling apart in this kind of 1-2 scenario. And even now, you know, as you started to kind of push back this wave, let's say this proposed wave 2 that is back here, you know, it's starting to get a little bit too large. So that's kind of one of the things. The other one, it's the, you know, this one where we're looking WX A, B, and then down in C still. So both of them are still fairly valid, but again, you know, I'm just kind of talking about what's happening with those stocks and kind of what I see. All right, so again, it would be a target that's probably going to be achieved maybe all the way up here into the beginning of March, maybe the first week or a couple of weeks of March, and then we're probably going to get a pullback to the end of May, and then you know, then we'll probably begin the next advance to the upside after May, you know. So that's kind of what I'm watching on the NASDAQ. And, you know, let's see kind of what's going on with gold. And, you know, gold, I have 2 counts on it, and both of them, now, very surprising rally back in here. I was counting it as an ABC, but I did not expect it to be, you know, such a sharp rally in this proposed C wave, right? This is underneath the bearish count, where this is a second wave, that's a 1, and then you go in an A, down in B, and then up in a C wave. C versus A in a flat reaches 261.8 to perfection, then it pulls back. It looks like there could be an ending diagonal in there or something, but you know, we're watching the break of this. If it breaks below 1900, I think you know, gold, it's probably going to be prone to move lower. And I do think that gold is going to have you know, a period of correction all the way until about June. So we're going to get a pullback no matter what. If it's an impulsive move, it's probably going to be a 1, 2, 3 and accelerate after June, July and continue lower. If it's a wave second pullback, like I have it back here, then, you know, give it a second to upload right here, right? If this is the end of the wave 4, right there, Y, C of Y of 4 with a minor wave 1, then you're going to start to do an ABC pullback. And, you know, from kind of what I'm seeing, I think this wave A will pull back into March, right? So as the markets are starting to kind of top out, gold is selling off into March, back into this resistance level. Then it goes from March to, you know, April in some kind of a correction. April, May, pushing back to the upside as the other markets are correcting lower in a correction. And then you're going to get the second C wave drop up here towards the June 15. And then either we continue lower or we start to break to the upside. But I think gold is done. I'm going to continue to push sales on gold. I'm going to sell credit spreads. I'm going to sell GLD, GDX, you know, everything I can kind of get my hands on within the risk parameters. And, you know, try to take advantage of this decline in here. You can do a bunch of butterflies, option trades, all kind of things. But, you know, definitely gold, I think it's probably coming into a period of underperformance. If you look, I mean, even if you look, you know, if you take the SPX, the SPY, and the price of gold, you see kind of how flat that is, and you know how much actually gold underperforms there. So, that's kind of my kind of 2 cents here on the gold market. Hopefully this helps you guys out. Okay, on to Tesla. And I think I'm going to start. I have a couple of accounts, right? So there's this one, which I presented in some of the YouTube videos I've done in the past, where we look at this whole structure as a 4th wave. And that mimics this wave 2. And, you know, it came back into 38.2% at about 100, 106. This was the 38.2 on the log scale. And, you know, now we pull back from here, you know, quite aggressive. Again, just a very surprising rally in here. You know, I would have thought that this was probably going to be like a wave 1. You're getting a 2, and then, but no, the short squeeze is massive. But it is stopping. It is stopping here at the big resistance level in here that you have at about 180 all the way maybe to, you know, 196. So, you know, give it 180 to 200. It's going to slow down. You have a little bit of a gap in here, right? So there is a chance that this is continue. I think the top in Tesla is coming in the week of February 13th. So there's probably going to be a couple of more weeks of you know, sideways to up price section. Then we're going to hit a top in Tesla. and then we're probably going to correct all the way until April, and kind of come back down in April, and then we'll see if we're going to begin the next leg. So this is a 1, then a 2, and then we're probably going to go up either in a 3, right, or we continue lower after February 13th. So if it's a fourth wave, it should behave like a 1, 2, then go in a 3, 4, and 5, and continue to push to the upside. So I can't look too much in the future. Nobody really can, but I can look at the next couple of sections, the next couple of waves, which is kind of what helps us out, because you're right here at the right edge of the chart. So that's what I'm seeing: a continuous move sideways to higher in Tesla for the next couple of weeks, and then a pullback, somewhere between 38 and 50% maybe of this entire move. And then and that's kind of going to line up with with the rest of the market. So if the markets are, let's say topping out somewhere in March, and you're getting some route until about May, then Tesla will probably kind of follow through. It might be a bit earlier to react than the rest of the market, but definitely something to watch. And then if I'm looking at the more bearish count, right, if I'm counting this as a wave 1 instead of an A, and then that's a 2 instead of a B, similarly in a flat, then you have a 1, 2, and then you have 3, 4, then you have a 5. So that's third. Okay, that's a wave 3, and that means that you still got to do a 4 and a 5. Now you climb back above 38.2, and you've gone as high as almost, just a little past 50%, which is not what you want to see on a fourth wave. Now, if you measure wave 2 here, intermediate, it took 82 days. Okay, if we're assuming that this is going to be a fourth wave, it's going to take another 82 days to about July. So at the minimum, we're probably going to get, like I said, even if you go a little bit higher in here over the next couple of weeks, let's say you tag that 198, then you're going to begin some sort of a decline in here. And if this is going to be an A, you can get a B and a C, and create a big triangle in here. This fourth wave, nobody really knows how they're going to unfold, right? There's no way to, I can put you all the 3 corrective patterns in here, and you can say each one is possible. But what I do know is that if it's starting, it's probably going to take about 82 days, which, takes you back in, July, about July 25th, I kind of projected that fourth wave. So we'll see if that's the case. But, that's kind of what I'm watching under this count in here. And then, once that's over, then you're probably going to get another pullback down. I don't think that's going to line up with the rest of the markets by the way they're acting, but remains to be seen. So is this one. And then we also have this one, which looks to be a bit more appropriate based on the reactions that I'm seeing from the stock. All right, and I'm going to try to close off here with Zoom. Zoom is a stock that's been completely destroyed, right, along with some of the rest of this pandemic sweethearts. It climbed, obviously from 60 to 600 almost. Don't mind these labels. I just put here as an ABC because, you don't have much data. But this move from the highs to the lows, it seems like a 5-wave move. So, if you just say, okay, fine, that's wave C off a flat or something, but, maybe we just don't have to assume that necessarily the market will go, to new all-time highs in the next 2-3 years. In Zoom, maybe there's just going to be a pullback to 200 and just kind of sideways and just slowly kind of build some kind of a ramp. But again, there's not a lot of data in the stock. So, the most obvious count for me would be just a 1, 2, 3, 4, 5. And it doesn't matter what happens next. What I do know is that, at the minimum, you're probably going to get a big ABC in here, right? If it gets bigger, that's fine. Now, if you look at it, the prior fourth wave low, it sits at about 123.96. And, I think that's a decent target for this. And, that is about, what is it, from current levels to up there, it's about a 70% rise, 70%. If you're patient, you can probably reach these targets, again, maybe by summer. And then we're probably going to get a B wave and then another C wave into eventually the 150, because I think a 38.2 retracement of this decline, it should be a given, after any kind of massive decline like that. So that sits at about 148, assuming that we have already a bottom at 63.55, which is the previous lows. And it doesn't seem like Zoom is necessarily, has a lot of power. I'll show you a couple of other charts, but, this does look like a 1, 2, 3, 4 and an ending diagonal and a fifth wave. So I think Zoom, it's probably going to squeeze higher along with the rest of the markets again, maybe all the way up until March. We'll get a move higher, then a B wave, and then another C wave into May, June, July over there. So that's kind of what I'm seeing on Zoom. I don't have any other alternates, but I do have a couple of charts I think that I prepared here. And one of them is this one. And what I wanted to show you, it's again a couple of resistance levels coming up. So you see this 85 level, right? That could be a very decent target as we're moving higher. Look at the candlesticks in here. Look at the nice base. We don't have a lot of volume coming in yet in here, but it's starting slightly to pick up. I don't like that the computer services is still underperforming the S&P 500. Right? That's not that good. That's not necessarily helping the stock. And then also Zoom versus the computer services in here, it's still fairly flat. So there's probably a lot stronger stocks out there than Zoom, but it's starting to pick up a little bit in here. Accumulation, it's starting to get accumulated. It's pushing to the upside. The PPO, it's also kind of about to cross zero. So based on this, there's definitely bullish momentum behind behind the stock. So I kind of like it. And then again, because I have Tesla open, look at Tesla, right? Right here again against the automobile industry, outperforming since the end of December, a little bit in there, and then I'm sorry, this is automobile versus the S&P 500, and then Tesla versus the automobile since January 12th, when it kind of starting to pick up the rally, because obviously it's a big rally in here. So let's see, this is about 40% maybe. 40, 50%, maybe 60% from the lows, but it's coming into resistance, which is at about 200. I mean, this horizontal level is pretty clear here. So that's where we go. Accumulation distribution is pretty large, and then PPO is just crossing above zero. This alligator jaws are opening up, so a lot of momentum, but I think it's going to fall in the next couple of weeks in here, and then we're going to correct. Guys, as always, I always appreciate you. Don't forget to visit me on Telegram, take a trial, come be part of my trading room, I chat with the guys there every day. We talk about the markets. I do all kind of calls up on there as well and present you with updates. Don't forget to also, follow me up here on Twitter, and, I'll see you on the next video. Thanks everybody for watching. I appreciate you all. Bye-bye.